Hello, and welcome back to the Bankers Leadership Series in association with SWIFT on the future of payments. In Chapter 2, we're discussing the emergence of new partnerships and business models. It's very interesting. Obviously, there's a huge change, as we talked about in Chapter 1, in terms of the infrastructure level. There's obviously big reasons behind that. Simon, I was going to turn to you first. How is this new infrastructure really enabling a more vibrant economy?
The UK is a very rich developing economy anyway. There's a lot of innovation that's taking place, and some of the infrastructure changes that we talked about earlier are coming down the pipe. But we are already in an environment where we've got open banking live. I think that's going to drive a lot of innovation before we even get to the new infrastructure. The infrastructure will provide interoperability, it'll provide standards, and it'll provide a lot more richness of data. But to a degree, we are already making some great strides with the innovation before we even get that.
Marco, how would you say that this new infrastructure is really going to feed into, especially enabling the digital economy?
We have of the order of about 46 countries around the world where they're either live on faster payments or they're getting onto these real-time payment platforms in the next 18 months. And what we're seeing there is that this is digitizing an awful lot of the payments and receivables business in those countries. Definitely there's a lot of interest from regulators in those countries that see it as a massive benefit to their own internal economy. What we see is our customers using that functionality in the first hand, maybe to remove cash out of the process that they do, but it massively improves their own efficiency if they can know that they get instantly paid. They know who's paying them, they know where they're being paid in relation to that. So we're seeing some very interesting business models, and that's adoption across not just the financial industry, where it might be the collection of an insurance premium, but it might be the equivalent of hire purchase. A lot of these countries don't have things like direct debit, so requests for payment is a definite enabler in those markets.
Excellent. And Victoria, in terms of the position of the central bank, again, how are you seeing this really develop the digital economy?
We're working really closely with industry to understand where they see the changes and what they want. So some of the things we've done recently are to introduce non-bank service providers to the real-time gross settlement system, and through that we'll get greater competition and innovation in the market there. But that's responding to what we can see at the moment. We're also working to think what might be needed in the next few years. So for example, in the new system we're going to introduce capability to be 24/7. We're also looking at things, for example, synchronised payments that could make cross-border easier. So we see the core infrastructure as an enabler. We want to be as ready as the industry. We've decided, for example, we won't build on distributed ledger technology, but we've done some work, proof of concepts, to ensure that if in the future players using DLT want to connect to us, they can. So I think we need to be there, horizon scanning with the industry so that we can enable and embrace their innovation.
Well, I think that's a really important part, which is really about the innovation that is coming down the line, but then also some of the new, whether it's partnerships, connections, or business models that are emerging. Andrew, from your position, what are you seeing?
It's interesting because we're talking a lot about new architectures and omni-channels, if you like, and customer outcomes. So there is so much stuff that's going on there, and there's only really so much cash that can go around. So I often explain this at the bank that where do we want to spend our dev dollars? Where do we want to actually specialise? And when you look at all those connections, what you're starting to see is actually that people are starting to say, actually, that's a really specialist avenue to be. Part of ClearBank's journey was that we wanted to specialise in being a clearing bank and being close to the metal, as I put it, directly connected, but not really offering bank accounts or traditional bank accounts out to retail or commercial customers. You start looking at a lot more partnerships. So the stuff that we've done, for example, with Tide or Nationwide for Business, that's a partnership, a real collaborative effort to then try and make an impact in the market and deliver different customer outcomes and expectations.
Excellent.
And I think that's a really important point as well for all of us as banks, recognising that we're not going to be all things to all men. So getting the right partnerships, recognising that on one day of the week they may be a competitor, another day of the week they're a collaborator, and another day of the week they may well be a client. And that is changing the whole dynamic. So we work with a lot of the fintechs to develop propositions very much on that partnership basis.
Certainly from a SWIFT perspective, we are a two-sided platform. Our vision, certainly for the coming years, is to provide that cross-border instant account-to-account service real time, and to be open and talking to the point around ecosystems, the importance and the need to be open and connecting into whether it's capital markets channels or payments channels or alternative kind of means of initiating payments. That's really important as to enable that innovation. And we've heard some of the other people here talk about the importance of standards and the language that's used to underpin that, and moving to ISO 20022, both from a messaging standard, but importantly a data dictionary, something that's flexible, that you can overlay, use different channels to conduct your business, but in a way that's known by everyone. I think also is another way that the economy is going to be built to allow that innovation.
And I'd say, if we're addressing customer pain points, we can certainly talk about, we've spoken mainly about domestic payments here, but when we talk about cross-border payments, this perception that they're difficult, they're hard, they take a long time. And we can't go remiss without saying something about Swift GPI, and we've found that that's been transformational for us. Over 97% of our payments are now GPI enabled with the unique end-to-end tracking reference number. But what that's allowed us to do in over 100 currencies, and we're in about 60 markets globally, is we can track where those payments are, inform the customer where they are. So actually that real-time aspect of it, now we can prove it, now we can show it. Where it's not going quite according to plan, we can quickly rectify what that issue is and see where the pain point is and relieve that. And everybody's racing their game in relation to that. So it's actually something that's been quite simple, to the earlier point that a lot of the infrastructure is there. This is a very simple thing that's made a huge transformational difference.
Excellent. Well, thank you very much again. In Chapter 3, we're going to look at standardization and interoperability between these new infrastructures.